All right, in this video, we're going to continue on the workbook exercises in Chapter 6, and we're going to work on problem AP7B. So this problem is pretty similar to what we worked on in AP3B in terms of doing the closing entries and the post-closing trial balance. But additionally, we're going to prepare a set of financial statements here with our income statement, statement of owner's equity, and our balance sheet. So again, I'm just going to write it out so y'all can maybe get kind of familiar with this whole process of doing this mnemonic device for read. And we'll go through, let's do our closing entries first. But the one thing I really want to focus in on is, and I highlighted it here, again, it tells us in the instructions that an owner invested $5,000 during the month. And so we need to make sure that we account for that fact and back that out of the capital that we see in the adjusted trial balance to give us a pre-contribution capital amount. And then we'll show this in the statement of owner's equity as a separation with the contributions shown separate from the beginning balance of capital. Okay, so that's one thing we're going to account for. It's going to come into play here when we get into tab 2, but I just wanted to put that out there. And then we're going to go through and do our closing entries here. So remember, we start with revenue, and if you recall, I'm going to just put these in accounting format because I like to link these and it makes problems if it's not in accounting format with the linking. Okay, so the first thing we're going to want to do is close revenue, as it notes here. Remember that whatever revenue or expenses, what they are prior to closing, is you're going to do the opposite. So it's a credit, so we're going to debit revenue. Whoops, put it in there. And then we're closing these things to this transitory new account, the income summary. So then we just do it for the opposite. So we're debiting the revenue for the amount that it's currently a credit balance. I'm going to get rid of the extra stuff there. And we can just say close revenue accounts, or really just account. We just have one. And then similarly, we're going to close all of our expense accounts. Remember, those are currently credits, so we're going to end up debiting those. But our debit is going to be to the income summary, so we can just put that in. And then we can just kind of go down the list and select all of the expenses. Looks like we got them all in there. We can just link this in to pull in the amounts. Oh, sorry, they should be credits. They were debits, now they're credit. We're going to credit them to reduce them to 0 to close them. We're going to auto sum to get a total, so 1,225 of expenses. And then we're going to close the income summary account. And here we can tell, again, I had mentioned this in AP3B. We created that little T account, but I'm just going to figure out whether I debit or credit the income summary based on what's showing in the journal entries. And here we can see we've got 3,020 on the credit side, but only 1,225 on the debit side. So we are going to debit the income summary for the difference, so that now if you looked at this amount and this amount added together, you can see they sum up to 3,020, and now our income summary account is basically closed as well. And then we're going to do the offset of that entry to capital for that same amount there. So capital is going to go up by 1,795. And then finally, we're also going to close out, so that gets us through the 3 here. So that's revenues here, expenses, put our explanations in, close income summary, and we'll just say close with, just to put that in while I'm typing. So then we want to close withdrawals. So you can see that withdrawals has a debit balance. So we're going to credit that to close it. And we're going to debit the capital account as the offset for there for the debit. And that should be all of our closing entries done then. That brings us to the last one there, the draws. And then our post-closing trial balance, then we would see if we can select, all those down to capital. No, we don't need to, let me get rid of the extra decimals here. Just click that button twice so we get no decimals. We don't need any for this problem. Okay, then I'm just bringing in all of the accounts. And then capital is going to be this balance of capital plus the revenues minus the withdrawals minus the expenses here. And you see that gives us a balance of 49,395. And we balance out here, so we're looking good. And I guess I did that off the trial balance, but we could actually do this as well from the closing entries, which may be a little more applicable for our purposes here, is we could take this capital and then we could add the net of the expenses and revenue, which is this number here, minus the withdrawals, and we get the same number basically. Okay, so now let's go to tab 2, and we're going to complete some journal entries here for this problem. And technically we could have done this, it might make more sense, I guess, to do these incomes, do the financial statements before we close, because in the real accounting cycle, as you're going through it every time, the closing would really be like the last step you take after you prepare the financial statements. But we have all the information here. It's not like this is preventing us from going forward or anything. So let's finish our financial statement. So having that say text really messes up our linking. So I'm just going to go through and click on our formatting there for each of those. Okay, and then we can link them more easily. So our income statement, remember always income statement is going to be revenues minus expenses. We don't need that bottom line there. So I'm just going to link everything, and we're linking it off of our adjusted trial balance. Remember, that's what I was just saying, is that typically how the process of the accounting cycle works is that the closing entries happen afterwards, but we still have access to the adjusted trial balance. This is what we want to prepare the financial statements off of. So $17.95 net income, and that's one thing you'll notice is, remember here in our closing entries, that's the same thing you see as the $17.95. Okay, and then that number comes down to our statement of owner's equity. And then let's link our beginning balance here. Remember that we separated out the investment contribution portion so that we can add that in and see it separately. And then we're just going to reduce this by the draws. Just put that in, and we'll say this plus the investment and the net income minus the withdrawals gets us to $49,395. And so hopefully you can kind of see how you're, connect the dots here in terms of what you're seeing from a closing perspective and what is shown on the statement of owner's equity. You're basically showing you more or less all of the pieces of the closing. This is what we're doing. We're updating capital to account for the draws and the net income and the investments, etc. And when we're doing the closing entries, we're basically doing that, but from a journal entry perspective of closing this all into ending capital. And you can see how that ending balance there is the same as the ending balance after we close. Okay. And then our assets. And actually, if we want to, we can pull on the balance sheet. Oh, geez. There we go. It keeps wanting to default to text. It's interesting. On the balance sheet, we basically show everything that is from that could be what's on the post-closing trial balance, essentially. So we have all these asset balances. We have a little bit of our contra asset accumulated depreciation. add those all together. And then on the liability side, we've got accounts payable, interest payable, unearned revenue. I think that note's payable. Yeah, capital's too far. That's the last one. Accounts payable is 7,700. We just drag that down and capture all of those links from here. 19,000. Yeah, that looks right. 19,000. Okay, and finally, we're going to pull the ending capital off of our statement of owner's equity, add the liabilities and equity to see what that totals out to, and confirm that our ending balances of assets equal liabilities plus equity, as you can see here. So, looking good. Okay, so again, remember your mnemonic device and how that works in terms of the closing entries. They might be a little confusing at first, these closing entries, but if you learn just the mechanical process and you maybe have this mnemonic device to guide you, you're going to do the same thing every time. So you don't need to do a lot of thinking in terms of what the entry number, amounts are going to be. They're just the same that you have in your adjusted trial balance, but just opposite. So again, if advertising expense is 400 debit, you're going to credit that for 400 to close it. So as long as you understand the flow of the closing entries, again, they're going to be the same every time. So hopefully that maybe helps a little bit. All right, well, that wraps up this problem. In the next video, we'll work on the final workbook exercise problem in Chapter 6, which is AP 14B. All right, I'll see you there.